In today's video, we'll be taking a look at why this chart at this price is the most important for us to be looking at in the markets right now. We'll also be talking about our technical analysis levels for the SP 500, Nasdaq, Bitcoin, Tesla, gold, silver, and more throughout the video. Yesterday, the bulls were back, and they were back with big green candles. Almost every market saw bullish movement. The question is, can they sustain it? Find out more in this video. Stay tuned, guys. Okay, let's have a look now, as we like to do, at the heat map for the Monday session. And you can see here, it was all about semiconductors. Nvidia, I'm reading here, 10.21%. Phenomenal movements across the semiconductors yesterday. And they have been a good leader for technology. If you see them running through, everything else tends to come through as well. Tesla as well, 5.13%, very strong day for Tesla. And when we start to look around the actual indices, you'll notice it was led by tech. Little bit of a sell-off near the close, but overall technology very, very strong with the Nasdaq. We kind of thought as a community this would happen. I think you guys have been really, really good at picking these, and we've found some good levels. So Nasdaq, we were on this one. We were certainly on board the train for the green side. And then of course we had the SP 500, IWM, which is the Russell, and Dow Jones lagging behind. Nothing really new to see there when we start looking at it. When we go to the sectors, we can see here communications, technology out in front. Communications is a great early mid-cycle kind of concept, and it is really starting to play out. I've noticed this come through over the last couple of months as one of the better investments, which means that we are playing the same game that we were playing back in 2008, 2009, 2010 in terms of recovery cycles. The algorithms seem to be rotating correctly into the right indices. So make sure you subscribe, and of course, if you enjoy these videos, smash that like button, because we'll be following all of these throughout. One of our favorites for the near-term future is, of course, going to be XLV, healthcare sector, and we'll watch that one as it starts to come into play. I'm sure it won't be too far behind, maybe a couple of months from here. We had XLF, XLP, and some of the defensive areas not doing so well. You can see them all down here. Defensives usually run behind. Now this week, we're still in earnings, of course. What earnings do we have? Well, Nvidia moved heavily, but take a look at this. We've got Nvidia after the close, of course, Wednesday night. We've also got Snowflake moving through here Wednesday. This is the earnings whispers data. And then we've got Salesforce and Costco wholesale through the Thursday after close. If you want to get these type of reports, you can get them from Earnings Whispers. Follow FX Evolution on Twitter as well. I generally share Earnings Whispers reports because I think they're really excellent for everyone out there. Now, do we know why the bulls are back in town? I would like to think it's exactly this, and that is basically retail have stopped buying calls. Effectively, we had equity calls being a really, really huge component of the market through that January period, of course, when everyone was buying and you saw hyper stocks go crazy and everything like that. Now, why did they hit that crescendo and then drop? Because at this point, you'll notice all of those stocks went out of control. They hit really high levels and then they started crashing. So what just happened recently is a really important point. Calls came out of the market at the same time as we started to see the market go bullish. Why? Because they're expiring, interest from retail is dwindling on it, and therefore it's time for Wall Street to push the market higher. The same thing happened over here. Why do we see a spike? And you might say, but Tom, the markets went way higher after this point. Big tech. If you actually look back in the charts, you'll notice this is the same point where Amazon, Google, some of those other companies, they all hit those kind of peaks that they sat around at for some time. Again, sucking in the retail traders and then letting all their calls expire. It's a nasty game out there, guys, and we need to be aware of that. This is a great chart here shared by Spot Gamma on Twitter as well. Excellent stuff. I really like this chart quite a lot. So just quickly on a bit of news, of course, yesterday we saw Bitcoin rise back up. A lot of people are talking about how Elon did this, obviously the Dogecoin tweet, and then of course talks about sustainability with miners. I'm not really too won over by any of that type of stuff, but the price action is starting to look a lot better. We saw yesterday in our live stream, 1.5 hours before the New York Open, we basically saw a huge level of price structure recovery, and it all started with the 4-hour 20 exponential moving average. We'll talk about that soon. But to begin with, technical analysis, dollar index. Have a look at this. Dollar index continues to be in this downward trend line. You'll see the pressure being put on this point down here. Once we close under here, where does the dollar index go? It goes down to this level. What's that going to mean? Risk on in the stock markets. Generally, if the US dollar is weakening, people are putting their money at risk, which means stock markets, growth plays, etc., etc., etc. So this is looking pretty good here. As long as it closes below, we should be moving down to this 89.20 zone, further strengthening things like the SP 500. When we move over to gold, you'd think this would be going up, but gold struggling at this 1888 area. This is a very key zone, and I think if we break through this with a closure above, so let's say we get a closure above, then we can start to think about 1900 plus. I'm thinking 1930 and then 1960. We need a closure above, and this price action as it sits right now is not what you want to see for gold fans. In fact, it's come down to the 50 exponential and stopped all these series of higher lows. We've now got a new lower low right at the resistance. Not great when you're talking about gold. We have to see more. I'm looking for an 1888 plus closure breakout before I jump back into this market. Move over to silver quickly. Similar thing with silver, trapped within a zone. We have the $28 as the target here. We want to get a closure above 28. And if that occurs, then we can move towards the 30. I feel pretty strongly that this consolidation here, if it did break out, would be very, very good for silver, and of course would instigate that next level of squeeze. But while it's trapped in this range, it's not really one, I think, for the community, because it's very, very tough to figure out the next direction that it wants to do. Now, if it closes below, of course, where do we go? 26.70. 5. It's not going to be that great. So we need to see more here from silver and gold across the board. Move over to Bitcoin. Let's talk about the repair that's been going on here. Firstly, 4-hour 20. The entire way down, I tweeted about this on the weekend. Basically, the entire way down, we did not break through the 4-hour 20. We have just closed above. We have then found support at the 4-hour 20 exponential moving average and started moving up. We've also got through this trend line of a series of lower peaks and started moving up. Plus, we closed above the 39,000. I think all of these things are starting to signal that we could be moving towards the 42,000 again for Bitcoin. And then, of course, as soon as we pop that 42,000 in, I believe there's going to be some really nice recovery. That's effectively when you're putting in the bigger double bottom. We saw the shakeout on the weekend, making a new low underneath both of these. This was, of course, where the whales started coming back in. This was the next level. And it really is super interesting when you look at these markets. We actually shared last night, and in our Discord community, get into the public Discord community, guys, links down below. And we shared this thing that showed that the whales had been out of Bitcoin for quite some time, and they just started really heavily purchasing at these levels. And I mean really heavily purchasing. The uptick is quite extreme. So the recovery's in. It looks like Bitcoin for now is doing the right things. We've got a new peak over here against this point, and I'm looking to see the resumption of some uptrend action really coming through at 42,000+ close. We need an 8-hour close plus above this zone, and I'll feel very comfortable that the bottom is in at that point for at least the shorter term on Bitcoin. Let's move over to the stock markets because a lot of interest was coming back in there. Great news for Tesla holders. We closed above 600. Well done, Tesla guys. You finally got a nice green day. You've been waiting a long time for this one. Closure through is strong. What that means is, of course, now we can move towards the next level. Where's the next level? 666. The devil number, that's previous support. And then when it closed through there, we went all the way down to where we are now. So Tesla might have some decent percentages on it here. Let's have a think about this. What is this? About 10% up to the next level if it continues to want to go bullish. Why do I think it could do that? It's all down to this structure. We had resistance found, closure breakout. So we might see like a little pullback and then a movement up into the 666, or like Tesla likes to do, maybe it just completely slingshots to that level. It does look bullish for the first time ever. This is not, again, a great trade or a great level, but it is the type of thing that I'd be looking at on the markets, and it's the way that I would break it down. Support, resistance, closure out. It makes sense to me. Let's move over to US oil now. US oil definitely had a great day. Look at the daily here, straight back up into this 66.50. I'm looking for a closure above this zone, and I think that will resume further bullish pressure in the energy sector for what I think is one of its last moves up to the 75-76 area. That would be phenomenal stuff if oil can get up there. So I'm looking for this level to break. We'll continue to follow it on the channel. We'll move over here to US 100, the Nasdaq. What a beautiful trade, guys. We saw this come through live in the stream. We were feeling really bullish. You know, I felt bullish ever since we got through this one, and the reasons are clear. Bottom in at this point. I didn't really think that this would be a failure. It's too good technical analysis. Support, support, resistance, resistance, resistance. I think the community was on this. You guys know what's up. And you guys know that the next level is going to be around this 13.8. So 13,800 for the Nasdaq is going to be that resistance. Why? Because we've got support, support, resistance, and then we're going up fairly heavily into this. So I expect something like this to occur. And then hopefully we continue up. Usually when you put a bottom like this in, it does go on to make new highs. Now, that's not always the way it does. And when I mean make new highs, I mean smash off the previous peaks. But it's a good indicator that the market is ready for the next move. It may seem ridiculous, but that's the type of thing that you're looking for in these markets. And a lot of people say, oh, but Tom, we didn't get a correction. I think that 8% on the Nasdaq during any normal year would be a correction. This is very standard. We're about to get a 2050 cross where the 20 exponential is about to cross the 50. Things are looking and way better in the markets. And I think overall, this is looking strong. If we go over to the QQQ, again, you look at this weekly, it makes sense. Weekly 20, weekly 20, weekly 20, weekly 20, double rejection here on the QQQ, which is the Nasdaq anyway. And we go down again to something like the 4 hour, and you'll see here, very strong price action. Again, the same problems are up here around this 335, which will be equivalent on the Nasdaq for that level. But if we can get through that level, then we go up to the 342. And once we get through that, of course, new highs will resume. Why do I think new highs are coming? It has a lot to do with this market, the US 500, the S&P. The S&P broke through the 4180, guys. This was a critical zone that it found a little bit of problems with. It's tested it multiple times, 1, 2, 3, finally got through. Now we could see a little bit of a pullback, then find buying pressure here. Make new high, that would be awesome. But the bottom, again, seems to be in here. And was it early? I think when you're talking about the SPX, you're saying, okay, is this a zone that it should have pulled back to? Well, it made sense. I mean, 50 exponential here, 50 exponential here, 50 exponential. It was a shallower pullback than we were hoping. We ideally wanted a 3960 pullback back to the weekly 20 exponential, which is, I guess, the better correction. And what this tells me in the market is that we are going to correct again this year. It seems very likely that we are going to have a second correction later on in the year. And the reason, because this is too shallow. Maybe the market goes hyperbolic again. I don't tend to think so. I think the market will make maybe new high. Maybe it continues on with this price action. These candles are hard to ignore right now. But of course, if we ever snapped underneath this zone, then I think we would really have a bigger correction in play. And what I'm thinking right now is we go on and make a new high, hit something like a 45 or even a 46 or something like that. Then we break down again, and then we find the 20 exponential later on this year, maybe August, September, those kind of weak months in the year when the next big earnings are coming out. Because 20 exponentials are healthy corrections. We did not see a healthy S&P 500 correction. We saw a shallow one. And because it's shallow, it makes me think that there could be a second event throughout the year. That's definitely something I'm looking at. For now, 4180 has been cleared. Let's see how the market interacts with this zone. If it does pull back to this zone, will it find buyers? Once we take out, of course, a new all-time peak, it's going to be hard for us to definitely predict where it's going. I would be taking this distance right now, extrapolating that out, and kind of thinking like a 4300 is in the works based on the price action that we're seeing in the charts. Guys, I hope you enjoyed this video. If you did, please remember to subscribe, smash that like button if you enjoyed it, or the dislike if you didn't, and we'll see you 1.5 hours early before the pre-market open. Thanks so much for the support recently, guys. I didn't give you a shout out either. 60,000 subs has been found on this channel. We're almost at 60.5, and that's thanks to you guys sharing, thanks to you guys being in the Discord community, and of course, interacting with the community. I appreciate each and every one of you, and I'll see you later on today. Bye for now.